But now, right, because people are mispricing the risk in the market of what they think Bitcoin is going to do, like Strategy and Strive are now having to issue these at much higher interest rates. And so they look a lot more appealing. And in fact, on a risk adjusted basis, they actually do better than stock, right? Because if you look at stock over the long term, stock is only effectively going to yield about 7% in real terms. Which, if you translate that with an inflation adjusted rate, it could be anywhere between 8 and 14%, but obviously moves around quite a lot more. And so if you're looking at that apples to apples comparison between that and something like Stretch or SATA, you could see obviously why people would want to hold something that doesn't fluctuate as much, where they'd have more access to their cash in any given period of time and be able to take on that higher yield. And yield is worth more in the near term. So one of the reasons why people like bonds so much is because they get paid, right? And then they have a guarantee of their money coming back at some period of time. And people weight that more towards like it's less risky because I'm getting paid. And it's the same thing, right? If dividend yields in stocks are very low, which they typically are, right? They're highest being maybe 2% that you're going to get in even a value company, versus like literally getting 10 to 12% in your hands on a monthly basis. Obviously 1% a month if it was 12%, that like your risk is much lower on a risk adjusted basis because you're getting that cash sooner.
No, this is great input, great analysis. Thank you so much, Morgan. Stretch is the most liquid preferred stock in the market today by an order of magnitude like 8 times bigger, basically. How is it possible that in Wall Street, a stock that has been there for 8, 10 months is 8 times more liquid than assets that have been listed for a very, very long time? Because it's incredible to see. Like, what's your take on that?
Yeah, I found that really interesting as well. I think it's a function of the yield, to be honest. And if anything, it probably means that sometime in the future that they're not going to have to issue at such a high rate. But the reason why it is so interesting to the market is because of that. I think also there's a play on the dividend where you try to make sure that you're trading around the X dividend date and that you're making sure that you're holding on the X date. So there's definitely been some increased volume as a result of that. But yeah, I guess it's I think honestly preferreds aren't really that interesting typically. And this one is linked to Bitcoin. So between the fact that, it's Bitcoin backed in a way, obviously there's still the company and the company has to operate properly and the company has to purchase Bitcoin on a regular schedule and do all the things that they say that they're going to do. So there's that additional risk of the company itself holding it. But it's a very different story than, you're just holding the preferred of a bank. You're not necessarily sure what their operations are or where they're going to be sticking their fingers in any period of time. Whereas like Strategy has been very straightforward about what they're going to do. They're just going to take the money from this and they're going to go buy Bitcoin.